Alright, so this morning I already made a video review about it, so I'm not gonna talk about it at the beginning of the session now, but we already saw a major dump from our current high of the day right here, all the way to the low. We have SMT divergence between the S and NQ up here. If we quickly take a look at NQ and the S, and most of the time what ends up happening if we see that SMT divergence, you can see that NQ didn't take out the Asia session high. We run it back up. It's something I keep in the back of my mind. Also note the SMT divergence here at the low. Let's go to the 5-minute time frame and not mess around here on the 1 minute. Get my phone ready for potential executions. We have a SMT divergence here as well. Also keep in mind that we have equal lows here on NQ, but I don't know. I like the bullish scenario here. What's the time? It is 9:20 and we might be getting our market structure shift. Let me get rid of all this 1-minute stuff. Just did some analysis before that, but the only thing that's important to me now is we cleared higher time frame liquidity pools. If we go to the hourly chart, the next sell side liquidity would be right here at 4755 and then again at 4743. How could we deliver into that? By maybe retracing into the new day opening, not new day opening gap, one of those 1 hour bearish fair value gaps to continue lower. We beautifully kept holding this 1 hour bullish fair value gap here, cutting right through this bullish fair value gap, so we could look for potential resistance. But 9 out of 10 times, if London does this, we usually get some sort of a retracement. It's very rare that we don't even revisit the VWAP at least once. Let's see how this candle is going to close. 5-minute time frame. And we closed above. That's nice. So theoretically, just looking at the 5-minute time frame right now, this would be our breaker block, that highest up closing candle between our most recent two lower lows. Low, lower low, displacement to the upside, that would be our breaker block. We've already tested that. How many points is that exactly? So from right here all the way to the downside, 8 points. I'm gonna try a little long entry here. We'll see how it goes. It's 9:25. Pre-market, last 4 minutes before the New York Open. Of course, we could also just see some sort of seek and destroy right around here, and we eventually continue lower into this old new week opening gap and our higher time frame liquidity pool. But I think some sort of retracement would be healthy. Again, going to the 1 hour time frame. We have a 1 hour bearish fair value gap here. We never close below the bullish one. 4791 would be a healthy target, I'd say. But let's go back to the 5-minute. Already in a long on my funding pips account of the breaker block here, even though the breaker block doesn't really look nice because it just consists sort of one candle. Let's see what it looks like on the 1-minute time frame. Well, on the 1 minute it's not much better, and this also kind of looks weird, that last pump, and we immediately retrace back. We'll see. We get more information soon. Not risking a lot on this trade. That would be silly. I think in this case it actually makes more sense to only look at the body. So two different scenarios. A, breaker block is going to hold, and we're going to continue higher paired with SMT divergence. Scenario B would be the breaker block isn't going to hold support. We also don't have a bullish share value gap on the 5-minute paired with it. And we might do some seek and destroy first and continue lower during the PM session. Give market makers time to actually take some profits after the 25-point drop. Let's see. I mean, the 2022 model is confirmed. That's out of the question. But we all know that they still sometimes fail. Let's see, bullish volume imbalance. Oh, good morning, Agent Smith. Feels like home. 1 minute to go before market open. Let's take a look at NQ, and I don't know why my chart is so super laggy. Better. Might have too many tabs open. No, not really better. What's happening now? Let's start again, open a new tab. Okay, the market opened up. We kept holding that volume imbalance. Duplicate tab. And put it on here. Nice, that volume imbalance ended up holding support. That's the only real discount or inefficiency that we had within our breaker block. Let's take a look at NQ now. It's not laggy anymore. NQ is doing the exact opposite. That's interesting. At least initially. Oh yeah, fans are spinning. What's the stream connection and quality like? Is it good, or are there interruptions or anything? Because I'm running something on my PC in the background as well. And it might just be a little bit too much, but we will see. Especially recording it. Running in profit. First targets would be all those short-term highs. And with short-term highs, I'm always looking for a little swing point with a lower high to the left and a lower high to the right. Like this one, this one. This wouldn't be one because we have a higher high to the left and a lower high to the right. Let's see, 5 points from the entry. I place my stop loss at a 5-point limit. No, not up yet, 250 bucks. Let's see. This would be my first real target. And it would also line up with our, almost with our 1 hour fair value gap. So actually here at 4791.25, 4791.25. Yeah, doesn't matter, doesn't make sense right now. But we see that SMT divergence right here at the low. But it's interesting seeing them doing the opposite. Keep an eye out. Move my stop to break even once we hit some short-term highs. A 15-minute time frame, no inefficiencies until we hit this high. 1 hour time frame, half an hour to go. Can check out the 1 minute time frame and see what that looks like. We have that last manipulation. And note how we immediately after hitting that low of the day, reverse immediately. By the time we close above this bearish fair value gap with this candle, we can already enter a low risk entry long, really. Already showing us that it's not respecting neither this bearish fair value gap, not even this one. And it's really doing that not within 10 or 20 candles, slowly moving up. It's doing that within 1, 2, 3 candles after taking that sell side, paired with the SMT divergence. That's really, yeah, that's just momentum basically. Nothing new about that. Let's see how this 5-minute candle is going to close. Take a quick peek at NQ, doing the exact opposite. NQ seems like it's going to go for those relative equal, perfect equal lows actually. While ES is pushing. We open up with a volume imbalance. Yeah, let's get rid of NQ here. So theoretically, we would anticipate support on this potential order block. Down closing candles within an uptrend, bullish market structure shift, holding support on the breaker. So that's just naturally what we would anticipate. Let's see if we have any questions. Okay, connection is great, perfect. So already just being aware of what NQ is doing right now, I don't like that. And I really, for the new year, I really decided only to look at ES, and it still works. It's really shouldn't be any of my concerns to know what NQ is doing. Sometimes it's enough to give you that little bit of doubt or hesitation, which most of the time is gonna cost you a lot. One chart, that's all. If ES is going lower or doing something similar that NQ is doing, we will see it on the chart, giving us little clues and hints. that up might not be the direction we want to go in. But so far so good. My entry came from here, right off the breaker block. Simply hit market execution once I see the futures chart hitting that area, maybe a little bit lower, maybe right up here with the spread. So let's see. Check out the 1 minute. We have a 1 minute bullish fair value gap here. If we fail to hold support on that 1 minute bullish fair value gap, we're very likely gonna hunt some short-term lows. NQ looks like it's going to, yep, NQ hit sell side. And I opened again. All right, so we likely, looks like we're gonna close below that bullish fair value gap. Yeah. Are we? I would like to wait for this 5-minute candle to close before making a decision. It's definitely not what we would like to see being in a long, and that's already something that usually leads me to taking off some risk, closing 50% of the position. The breaker block might still hold, and we get now some bullish SMT between both of them, but it really doesn't look that way right now. One minute time frame, higher high, higher low, lower low, market structure shift. We attacked lows. Yeah, I'm gonna get out of this position. Let's take a look at NQ. 1 minute time frame, we're on that lowest bullish fair value gap. No, I didn't press exit yet, but yeah, that's not bullish. I'm out of the trade. 0.5% loss. See what we did here? How we immediately retraced to this candle's low. That's immediately rebalancing, and as we speak, gonna take that as an opportunity to go short. Not leaving behind a new bearish fair value gap here whatsoever. We can also check the 1 minute time frame. No, not even that. Then even retrace into the 1 minute fair value gap. Efficient delivery on the 1 minute time, 5 minute time frame. Yeah, but the overall ambition for today is really not to risk too much after the big London session drop. Because most of the time, if you, for example, didn't trade the London session, you saw that massive drop on basically most of the assets that are, on most of the assets, you tend to, you feel like you probably missed out and you're waiting for a move of the similar size during the New York session. And most traders think like that. And that's when market makers can take opportunity or advantage of that and make it look like it's going to go long and short, knowing that you will likely jump on the train whichever direction it's going to go in because of that fear of missing out again a second time. Still holding that breakup block though. Yeah, NQ already heading low. If we look at the higher time frame on NQ, we're almost back at the low from the drop that we saw. That's Wednesday the 20th of December. All right, yeah. Looks like NQ is really going for that. That would be the low, yeah, right here from Wednesday. And if we take a look at ES, we are talking about this low. So NQ is basically already somewhere down here, while ES is still, well, good confirmation would be hourly candle close. So in 15 minutes, basically closing below 4778.5. Then we have this new week opening gap here from the 17th of December, sell side. And like we said, like I said in the weekly outlook, slow and steady uptrend right here. Market structure shift on the hourly time frame. Likely gonna go for a low resistance liquidity run, quickly running out all these stops, and then likely going to retrace. I have the hourly markup here on my chart. Let me put all this into group 1, hide group 1, and turn on 1 hour structure, turn off the ICT all in one, and basically retrace into this unfilled inefficiency from the 13th of December. That's what I think is very likely. Trap buyers, and yeah, that idea for the first couple of weeks of 2024 was confirmed immediately. On Monday, on the first day. We didn't make a lower low just yet. Yes, it's still playing around. Turn on group 1 and drop it back down to the 5-minute. 20 seconds to go. Let's see where this candle is going to close. Then in that scenario, if we get the close below this low, we could label this as unicorn setup. Nah. Let's forget about the 1-minute time frame. 10 more minutes to go on the hourly time. Now 15 actually now. 15. Nice top wick here. Immediate rebalance, no 5-minute inefficiency. The last fair value gap we've left behind on the 5-minute time frame was here at 750. So this could be a potential unicorn here on the 5-minute. Bottom. And this would be the first drawn liquidity just based on the hourly time frame at 4755. So basically another 20 points from where we are at right now. Do we have any major FVGs on the 1-minute? Oh, tricky. Let's see and stay patient. NQ almost hit that low right here. Interesting. Of this entire upturn, we looked at it on the hourly time frame. Divergence couldn't be bigger. So just based on the technical side, basically right here, the SMT divergence, low of the day, 1 hour bullish fair value gap, market structure shift, immediate displacement. I'd rank this setup, this 2022 model, with I'd say 7 out of 10. The only thing that's really missing is a nice fair value gap to enter on. but it's at the low of the day. We took out a higher time frame objective. Previous week's low, we have a higher time frame fair value gap. We have SMT divergence as well. A quick displacement, nice bullish engulfing candle here. Really only lacking the fair value gap there. But in this case, the question why this setup will likely fail. I mean, it all depends. I'm not really a fan of getting in with the market structure shift or on the breaker block, having my stop below that low. If I already see price telling me, screaming at me, that we're not going to continue further to the upside. This candle said it all. Of course, sometimes, okay, now we're dropping. Of course, sometimes we still reverse from somewhere around this area, but 9 out of 10 times, there's no point in holding it past that point. So what would be nice to see is maybe a bearish fair value gap right here. So a 945, a potential bearish fair value gap right here. And then we could use this down closing candle as our new unicorn breaker block and a close within the next 1 hour. Still 10 minutes. That's all right. But of course, that hourly close below this gray box right here, below the hourly bullish fair value gap. But I would use this as an entry. I'm already in, like I said, once I saw that bearish engulfing candle. And understanding that we're likely not gonna reverse back to this high before we take out this low. Getting out of the long. Why not go in with the short, especially if the higher time frame trend is bearish. Six, 5, 4, 3, 2, 1. That's a nice closing candle with no wick to the downside. Price keeps on delivering very efficiently. So if we leave behind this inefficiency here, it's also not just a compare those two levels right here. Yes, we closed below the low with 1 or 2 ticks, and we immediately reversed. Here we really said, nah, we want to continue lower. 3-point close below. So if we get our first inefficiency here, I would take that. But let's see. Now we hit the breaker block, the unicorn breaker. Otherwise, we're just gonna see seek and destroy behavior today. At least for the AM session. Breaker block. Interesting. Let's take a look at NQ if NQ, yeah, NQ cleared that low. Yeah, but even on NQ, another entry than an entry where you just jump in with the market. You see like, okay, looks like it's gonna go down. I've got a good feeling about it. We have a draw on liquidity that previous week's low, even on the 1 minute time frame. Well, we had a fair value gap here, but I don't know, for my liking, that would be a little bit too far-fetched. Because we never really closed below this higher low. higher high, higher low, higher high. We only wicked it. And this kind of looks more bullish. No, not a fan of it. And then from here, we didn't use the first fair value gap entry that you could have taken would have been right here into that final draw on liquidity. That would have been the easy continuation play. 1 minute. That's interesting. Not respecting that inefficiency here. So if we now start to hold, the bullish inefficiency is left behind. It might be the early confirmation, at least for me. In the 1 minute, we could use this as our breaker block, but we're going to leave it at that. That we might want to continue higher. So I would really like to see it closing below here. It's 9:53. We have 7 more minutes to go. Looking good. Do we have an example for? No, not really. Well, ideally for an entry, I mean, I already mentioned I entered short here. We would have wanted to see a bearish fair value gap. Next best chance would have been the breaker block. 1 minute. Don't want to end up on the 1 minute time frame today. Let's see if we have any questions. No question. No one. Or a trade they took. Maybe a different chart. Interesting. So it's going to be the last 5-minute candle of that new hourly candle. Or of that hourly candle. Like I said, we want to see it close below this gray box here on the hourly time frame, because then we can officially invalidate this bullish fair value gap. The only bullish fair value gap here on the hourly before we hit our next potential draw on liquidity. And keep in mind, NQ is already right here at this low. Doesn't mean ES has to immediately follow. But it's kind of what we outlined. No, not kind of. And at the end of the stream, so at around 11 a.m. New York time, we're going to do the weekly outlook here on video and some questions and answers. If we get some questions, of course. Mm. 3-minute time frame. 2 minute. No. 3 more minutes to go. Let's see if we can close below our 1 hour bullish fair value gap. What do you guys think is more likely to happen? That we're gonna end up chopping around here, taking lows, taking highs, taking low again and taking the high again, and then maybe continue lower eventually after some PM session here after 1 PM? Or do you think we're gonna continue lower from this unicorn setup? And a unicorn setup is just a ICT reference basically, where we see a bullish market structure shift and 2022 setup immediately followed by exactly the opposite. Right now it looks like we're not gonna get our hourly close below our hourly bullish fair value gap. Yeah, tough New York session, or at least beginning of the New York session, because we don't have many fair value gaps or inefficiencies to work with to frame our bias. Comparing that to London, we had plenty right from the get-go. "45 seconds to go, 15-minute time frame. Then close below. Don't want to validate this as a true break-in structure because it's just 1 minute. But right now it's starting to look like we're gonna seek and destroy. Going for the high again. So that's a new hourly candle. Unfortunately, on the hourly time frame, we didn't close below our bullish fair value gap here. But from an hourly perspective, of course, still would prefer lower prices, but I think the short-term high is going to be next. All right, that's a total of 1% drawdown today. Also, right now, I'm not expecting that we're magically gonna turn around somewhere in here. Of course, it could happen, but I already closed my trade after this candle. Not really what I wanted to see. I think at the moment, the most likely thing that's going to happen is going to be this high being taken, and then maybe those two short-term highs like we planned initially. Tiny bit of a SMT divergence here. If we take a look at the S&P 500 and NASDAQ. NASDAQ made a lower low. Yes, did not make a lower low. I just wish we would have had something on the 5-minute time frame to frame our bias with. Basically fair value gaps. All right, let's see. Buy side, buy side. Buy side. Back to the 50% of the 1 hour bullish fair value gap. Still bullish, not inverted yet. That would be my last line of defense if you still stick to the short. That bearish fair value gap here on the 1 minute. Once we sit close above that, I think it's inevitable that we're gonna take out that high. I already think it is. And then we would see our next market structure shift, potentially. Let's see if we have any questions on Discord. Oh yeah, we have a few messages. Yeah, NQs looks like it really wanted that sell side. Bullish AM to VWAP is my guess, yeah. Maybe during 11 AM. I mean, VWAP is... Oh no, it's not too far away anymore. At least to the VWAP. Then we hit it and we reverse again and continue with the overall trend. We're still finding some resistance here. Twenty seconds to go on this 5-minute candle. Closing back above the 50% of our 1 hour bullish fair value gap. 1 minute time frame. Well, the potential is there for a little retracement. Take a look at the 15. 15 is starting to look more bullish than bearish. But with bullish, I mean short to midterm, if even midterm. So let's see, because we just created our first bullish fair value gap here on ES. Breaker block hasn't been respected. Both first initial 2022 market structure shift didn't play out. Unicorn setup, well, it might still play out, but already explained that I wanted to be delivered differently. We have a few bearish fair value gaps here to the upside, paired with this inversion. Let's look at our daily range from low to high. 50% perfectly lines up with the consequent encouragement of this inversion fair value gap. Let's see what the risk of that would be. No, I'm not going to take another trade today. I think so, at least. Mm. About to hit that 5-minute bullish fair value gap. Let's see if we can hold support in there. In terms of a tape read. So in this case, if we were to take this trade, we would be looking for a typical seek and destroy behavior. We take out highs, we move on to take out lows, leave behind a inefficiency and continue from that inefficiency to keep on taking out highs. If we see it immediately closing below this bullish fair value gap, I would exit this paper trade. Actually, why not even jump on the paper trade? Let's see if we can get an entry right here. Create limit order. Risk 1%. See if we can get tapped another time. New 5-minute candle. Taking out lows, lower high, lower low, higher high, lower low, and now we're just anticipating price to keep on doing what it has been doing. Invalidation for me would be the close below this bullish fair value gap. Yeah, sometimes it's definitely good, but I already have my higher time frame bias or idea of what's going to happen on the 15, on the higher time frame basically. I like sticking to my 5-minute time frame. But it also heavily depends on the chart and structure. Because when I'm going long here with this paper trade, I'm not really looking forward. Like, let's say, for example, I'm on the 15-minute time frame and I see my market structure shift. My target on the 15 with a healthy stop loss, I don't know, I wouldn't feel comfortable even trying to target a healthy 2-to-1 or 1.5 risk to reward ratio, just because of the higher time frame trend, 1 hour time frame. So if I'm counter trending that bias or that's, then I'm only looking for 5 to 10 points max. And I think for that, the 15-minute time frame is almost, too big. So we're filled with 2 contracts now. Let's see how that plays out. Where's the 8:30 opening? Right here. And by the way, I'm also not trading on that account where I took that short signal. Not short signal, but yeah, I mean, could call it short signal. I took that on the 100k funding pips challenge that I picked up on Christmas when they had their 12% discount. And right now I'm trading on that 50k challenge. Where I took those 2 losses. $15 seconds to go. Let's see where this candle is going to close. Can we hold the 50% level of this box? Closing right at the high. Zoom in. Now we filled in the entire inefficiency. Gonna wait for the 5-minute to confirm or invalidate. But it's kind of taking a little bit too long, in my opinion, to take out this short-term high, if it really wants to go to that area. Usually we see that happening a little bit quicker. Yeah, it's a nice SilverBullet timing, definitely. I give you that. The higher time frame does look a bit shitty, but that's also why I'm not looking for a 3 or 4 or 5 to 1 risk reward opportunity like I, for example, did this morning. Because the short setup was perfectly in line with what I anticipated to happen on the higher time frame. I secured my profits. I secured 3 out of 5 lots I entered with, and I let those other 2 contracts run, or lots basically. Stop loss at break even, and it played out to hit that previous week's low target perfectly. Doesn't always, of course, but I don't care or don't mind because I already hit my target for the day. So if you take, for example, this long opportunity based on SilverBullet, and because we just swept sell side, we're still at the low of the day. Yeah, definitely. But I would be a little bit careful of, at least I would make sure to take partials. No one ever lost their account by taking a partial, protecting their capital, taking off some risk, moving the stop loss to break even. And Q once again turning out to be the weaker index here. 5 minutes to go, and the time is 10:15. So this is actually a new 15-minute candle. New 15-minute cycle, 1 hour time frame. Yeah. Or I'd say taking a long here. It's doable, but it shouldn't really be more than a little scalp. I mean, and even just to this high right here, that's already 8 points. With one mini contract, that's $400. And it might seem that this might be a little, too much of a risk to take for such a small, let's say, 1-to-1 risk to reward ratio. But I'm not really planning on waiting for price to reach my stop loss. If I see my invalidation here for this paper trade, I'm gonna get out of the trade, or at least close one of the 2 contracts and let the other one run. But I entered this trade for a reason. I expect that perfect precision. That's what I'm looking for, and if I don't see it, I don't want to be involved. That's what I want to see, and I don't want to see close below, close above, then close below, and then retracement even further, being a roller coaster being in this trade. It's not worth it, and then eventually still making it up here. It's not what I'm looking for. I look for, okay, inefficiency. What could I target? And what's my invalidation? Invalidation would be close below the inefficiency. And that might not work on all. Let's say, for example, NQ. I tried it on NQ a couple of times, but NQ just isn't as precise as the S&P 500 is, really. So I'm making sure I'm taking a partial right here. So 1 limit. And once we hit that, I'm going to move the stop loss off that last contract that's still on to break even. Likely also going to trail it. You can take a look at the volume profile, and then we will very likely see a lag in volume right around this area. Volume point of control down here. Barely any volume, any transactions at all. Think you also, yeah, kind of. So let's see, we filled in that inefficiency perfectly. Once we hit exactly the high of that, where that fair value gap comes from, basically, we started to push. That's what I'm looking forward to see when I'm entering the trade, when I'm taking on the risk. We never closed below the 50%. That's also a nice to see, but not a must-have. Could be a early sign that we might not want to respect the fair value gap. Check out the 1 minute. Working to get through this. Better to just not look at it. 1 more minute to go. Oh, really? Checking my emails here at the moment. My phone. This is the final week of the Take Profit Trader buy one and get half off and get one for free. So that 50% discount. Plus another challenge for free if you pass the Take Profit Trader challenge. It's gonna end on Friday or Sunday. The final week. So I guess Sunday. Yeah, Sunday. Pretty good offer. I'm considering maybe for the live stream. I really enjoy the CFD accounts because you just have more room to breathe. We'll see. End of the week. Alright, we're back to the low of the fair value gap. So after seeing the bullish reaction of this area already, now seeing a close below that, and I would exit the position. Let's take a look at NQ. Two and a half minutes to go. Not worried about the wick. That's why I have a safety stop loss here. Only important thing for me is the candle close when it comes to the fair value gap. One minute. Two minutes. And 25. So that next candle is also going to be a new 15-minute candle. 15 minutes still looks rubbish. But could be our first close on the 15 at least, below the 1 hour bullish fair value gap. Take a look at the 1. Well, this would be our last level of defense. Same thing as we spoke about right up here. That last bearish share value gap, we kept on respecting it. This would be that last bullish share value gap. If we fail to hold this one, we're going to see lows being taken. So let's see, last 30 seconds. Can we push it back up and still close inside the bullish share value gap? Let's put this to the side. Doesn't look like we can. And at this point, let's take half the risk off. Get out of at least part of the position. If that would be my live account, I would close that entire position. I really have no interest of still being in a trade like this. That's not why I entered the trade. Not what I wanted to see. Like I said, I'm very specific with what I want to see, and that's how I can manage to keep my losing trades small and my winning trades certainly bigger than my losing trades. Close below our last level of defense. NQ likely already took the low. Yeah, heading lower. So this right now is a inversion fair value gap. There's also nothing wrong. So if you never saw me using that approach, taking off some risk, and you're new, then, well, I mean that this invalidation here, this candle closing below our entry fair value gap, our SilverBullet fair value gap, for example, then, I mean, you always have another chance re-entering once we close back above it. If that's happening, but that's the rare scenario. So I think the 15 did close now for the first time below the 1 hour and also the 30-minute. It's only the 1 hour time frame that didn't close below the 1 hour bullish fair value gap yet, but this might change with the 11 a.m. hourly candle. So theoretically, the unicorn setup still played out, but not nicely. And I much rather prefer to take my small loss instead of, waiting for it to hit my stop loss. Bongo Rambo 23, are you still in on that long? How do you manage your risk if you took on that trade? Do you cut it in half? Do you simply set your entry, your stop loss and TP and forget about it? I mean, for me, it also depends on the setup, but right now I understand that we are within that seek and destroy condition, or we might be leaving it very soon, who knows. But if I see that, I'm not looking for big trades. Small scalps, small quick in with an even quicker exit. Yeah, not much excitement today during the live stream, but still good practice. All right, second close below our bullish entry fair value gap. Just demonstrating it here. Like I said, I would already been out at this candle close. If I see bullish momentum again, even though we close below and we close back above, maybe paired with a nice volume imbalance, then I'm back in with that second contract. Let's wait for it to hit the stop loss there. Yeah, in Q isn't really showing that strength at all. Let's go to the higher time frame and look for a potential next target. I mean, really the only thing left here on NQ would really be this low at 16,630. So from the higher time frame perspective, NQ is already below here. And this would also for yes be my first daily drawn liquidity where we could actually call it. I mean, let's do it here quickly. Put all these things into our lower time frame folder. Hide it quickly. That's where we could actually call a potential daily market structure shift. We've been continuing to the upside. Higher high, higher low, higher high. If that changes, could see some sort of a deeper retracement. I mean, we have so many inefficiencies left behind unfilled. We ended 2023 with 1, 2, 3, 4, 5, 6, 7, 8, 9 bullish weeks. 9 weeks in a row of higher highs and higher lows on the weekly time frame. I mean, we don't expect it to just go up forever. That's also what I pointed out in the weekly outlook. Jump to the 5, turn on our 5-minute analysis. And stop loss hit. Easily avoided by, closing the position entirely once we close. I mean, it wasn't really a close call here. If we see the close one tick below the fair value gap, could maybe close one eye and still keep on holding. If we don't really see it moving away from our entry fair value gap, if you use fair value gaps as your entry, well, then most of the time, at least that's my finding for trading the S&P 500, it's better to call it. All right, we took the sell side with that new week opening gap, and still next draw on liquidity being here, coming in at 4755. So that miserably failed. No retest of the VWAP. Let me check the daily here on NQ. Yeah, on NQ, if we close like this, we can call it a daily change in state of delivery. Right here. What would I be looking for in terms of a retracement? At least the 50% inefficiencies, around the 50%, maybe the 61.8. Then I would take it from there, step by step. Not calling this the immediate high. But it's gonna get interesting, that's for sure. Alright. Inversion fair value gap. We took that sell side. Now we're starting to leave behind some structure. It is 1040. This is an entry that I would only take if I'm confident about the higher time frame direction. Because we just took out this low, the internal low right here, low of the day. Can once again paper trade it. Let's sell one right here. Stupid spread, and place another sell limit order on this fair value gap. And the same way how we took this as our fair value gap entry, and once we sort of close below, we close the position, or at least take off some risk. I'm going to approach it in exactly the same way with those two fair value gaps, but this time actually in line with the higher time frame. Price is not appropriate for this order. Buy stop to get out of my short. We just do it manually. Oh, you had 3 points risk bracket order. Fair enough, makes sense. So 3 points from here. Do you often see yourself getting stopped out of a trade with the bracket order if you use a 3-point stop? So basically meaning if you often get stopped out by wicks and eventually the candle is still closing inside the fair value gap and continues into the anticipated direction. I mean, on the 15, we respected our latest fair value gap here at 745 with candle bodies. Yeah, we overshot a couple of times with wicks. but it has been respected the entire time, below the previous week's low. That would have been a nice confirmation. Okay, close above the 15-minute bearish share value gap after taking out that previous week's low. Could be looking at a new 15-minute bearish share value gap in less than a minute. Then we're getting closer and closer to 11 a.m. where we're going to ask ourselves the same question. Are we going to close below the hourly fair value gap? Yes or no? All right, so now we're filled with both contracts. Once again, what we wouldn't want to see if we want to see this continuing short. Like I said, I'm not engaging here anymore. Then want to see these fair value gaps being respected. All right, so we filled both inefficiencies. We actually close above this tiny one, but I would put my focus on this one right here. And a question, when we can anticipate this type of price action, most of the time when we see that big major drop during London and the early New York session before the New York Open. Not every time, of course, but most of the times. And this can easily, very easily be avoided. So now we filled in the entire inefficiency, tapped our inversion fair value gap again. Invalidation for the short would come if we close above that bearish fair value gap, and even above the inversion fair value gap. Take a look at the 1 minute time frame here. So far, so good. No, fair enough. And that's exactly the same reason that you just mentioned here. You wanted to see something very specific. And that's okay. I mean, that's the same approach that I use. I want to see something very specific. I have my fair value gap. I have my idea that we're going to run this high. And that's why I'm not setting up this trade and leaving the charts. Because this is just a safety stop loss or a safety mechanism for me. Usually it's at 5 points. But yeah, sometimes I just give it a little bit of more room to breathe, because I don't really like to get stopped out by wicks. And very rarely we're going to get those big candles that immediately stop you out if you use a stop loss that's bigger than 5 points. And yeah, once I see the invalidation, I mean, yes, I could use a fixed point stop loss, but I like to, yeah, when I say that, wait for the chart to tell me otherwise if I'm looking forward to a specific outcome. And that invalidation came right here. No interest in giving up more than that. Yeah, not today, not on the first trading day of the year, first session for most. Nice reaction. Let's see what kind of close we're getting here. Just want to point out this potential inversion fair value gap here, now paired with a tiny, tiny, tiny little bullish fair value gap. And if we close below 4776, I'm going to trail my stop loss above this short-term high. No, I'm doing that right now. Take profit target. Going to take a quick partial right here. And where's our higher time frame draw? It seems a little bit 477. The new week opening gap seems like a good spot to take something off. And then, I mean, you can always move your stop to break even and go for a bigger target, but let's just leave it at that for now and see how price is delivering. Always depends what price has to offer. Take a look at NQ. Lower time frame. Let's see right now. It's 4:52, so 8 more minutes, 7 more minutes until the new hourly candle. Mm-mm. 1.5 more minutes to go for this candle to close. I would prefer no candle to close anymore inside this bearish value gap after already having it repriced or filled, delivered efficiently, whatever you want to call it. Of course, sometimes we also tend to get a consolidation inside of these areas. It's just going to take a little bit more time. But let's see, let's find out. Looks like it's going to be a PM session continuation. And like we said at the beginning, AM session, seek and destroy was in the cards, that's for sure. The probability of it turning out to be AM session, seek and destroy was much higher. So you either just decide to not trade on these New York AM sessions and sit out, come back for the PM session, or trade it, but also understand why, well, you lost. Or the setups failed. So that's that last 5-minute candle before the new hourly opening at 11 AM, right inside that macro. And the question, once again, is, are we going to get the close below 4778.5? Are we just going to leave behind another doji, or almost doji with a big wick to the upside and to the downside? Let's find out. Sorry guys, I'm gonna mute the phone here. Are there any questions regarding today's price action, the setups I took, or maybe you want a second opinion on the trades you took? Feel free to share the charts here into the live stream chat, or anything you would like me to explain or talk about. Alright, so now we tap that fair value gap for the first time. Just a tiny one tick. 2 more minutes to go for the hourly candle to close as well. We might be getting that. Yeah. 1 more minute to go. Let's see if we've got a question. Nope. 1 minute to go. $30, 15-minute time frame. Oh, we had a 15-minute bearish value gap up in here as well. That's nice. 1 hour time frame. In terms of higher time frame traders, if a 1 hour time frame trader, for example, sees, okay, might start looking like the trend is going to continue. I mean, it's hard to enter a long position here based on any technical stuff. We just had 1, 2, 3, 4 bearish hourly candles. And then 2 super tiny small bullish candles right here with big wicks. Right now, I assume they would think, or at least I would think, I can imagine that majority of higher time frame retail traders are really looking for that opportunity to catch that continuation move. They see the other indices are already below all the sell side liquidity or below these lows, and I try to jump on the continuation train. So we did close below our 1 hour bullish fair value gap. See what it looks like on the 15. Yeah, but still we didn't manage to close below our bullish fair value gap right here. I'm gonna leave my stop where it is. I entered the trade for the reason that I wanted to see continuation lower after filling in this inefficiency here. It might still do that, but I'm gonna leave the stop right here at this high. Also because we're getting closer and closer to the end of the live stream. So let's see if we have any questions, because that would be the perfect time to ask me. Let's take a look at NQ on the 5-minute time frame. Nope. And if we start right here at 9:30, looking for the potential 2022 setup at the low of the day. Close the position once we saw the close of this candle. Left one contract running. Was it? Paper trade. No. On the phone, right. Close that. Hit our stop loss. Push back up. Looking for the long of this bullish fair value gap here. Also didn't hold up, and we continued into sell side one more time. Basically just trying to catch that continuation in whichever direction here, really. Preferring the shorts for bigger targets. For longs, really just looking for quick scalps. And same thing here, just looking for that continuation. Eventually we're gonna get that continuation. It's not worth sticking right in front of the charts, waiting for it to finally happen, taking 10 losses while waiting for it to happen. It's 11 a.m. That's the end of my timing window. I'm currently not in a position anymore. I took 2 trades on the 50K funding pips account. a long right here of the breaker block and a short right here for the unicorn setup. Both didn't play out, but I didn't lose the entire 0.5 risk that I'm using. Right here I lost around 70 or 60% of my initial size, calculated based on the stop loss down here. And here we close the position early right here instead of waiting for our stop loss to be hit. Let's see how this candle is going to close, and then I'm gonna head over to Discord and see if we have any more questions. Stop loss has been hit. And we're likely gonna get a close above our bearish fair value gap. Five, four, three, two, one. And we're done. Done, done, done. All right, let's see if we have any more questions. 15-minute bearish fair value gap, yeah, but it might still play out, but no, not willing to risk anything more on that, especially today. Let's see if we have questions on Discord. Doesn't look like it right now. Anything you want to ask? Anything you're not sure about? And then we break lower again. That's too funny. It's typical to see something like that with the first 5-minute candle of the new hourly candle. It tends to not respect fair value. Very common. So candles, let's say the other candles within that 1 hour cycle, basically, they tend to respect fair value gaps a lot more than the candles right on the new hour. Retesting that new inversion. Yeah, like I said, I'm gonna leave the charts. It's gonna be it for me for the day. Awesome London session. Well, I don't want to call it poor New York session. Managed the risk well. We tried. That's the best we can do. The best we can do is trying and managing the risk well. And we did both of that today. We weren't afraid to enter a position, manage the risk accordingly. We were anticipating, or we were aware of the potential seek and destroy during the New York AM session. Yeah, I think still overall not a bad first trading day in 2024. Tomorrow is another day, exactly. And after tomorrow, there's also going to be another day. We're not in a rush. That's very important. If you are in a rush while trading, that's very likely not going to end well. Yeah, that's going to be it. If there are no more questions, then. You guys want to do some higher time frame analysis? Basically what I already covered in the outlook for 2024. I mean, the main point right here is I use the IPTA indicator, and I'm anchoring it on that last daily candle here, just looking for the last 20, 40 and 60-day range, basically this entire quarter, looking for sell side, obvious sell side, which would be right here on the daily time frame, where we also talked about that market structure shift level paired with the 50% and this daily bullish fair value gap. Just looking for potential targets here, really. What we could expect within that next quarter, that quarter one of 2024. That's the daily time frame. We have a nice volume and efficiency right here paired with a daily fair value gap. So even if we get maybe a confirmed market structure shift, that doesn't have to mean that we're going to attack this daily sell side. It can, of course, but it doesn't have to. But very likely we're going to see this inefficiency being filled in. Paired with daily sell side, NQ has already done that. Yeah, NQ has already done that by now. And I'm mainly, at least yesterday, focused on lower prices, because on the mid time frame, therefore I used the 1 hour chart. Market structure, I saw the shift, bearish inefficiencies, and that's where I ended up looking for that short early during the London session. One last look at the trading view chart. Perfect. What did we do? For the first time now, actually starting to respect fair value gaps and also inversion fair value gaps. So after not respecting it, we've retested, hit the low of our inversion fair value gap, and continue to push above our old bullish fair value gap that we used as an entry right here for the paper trade. And after seeing, okay, we close above our bearish fair value gap that we used as an entry, well, you could just keep on going if you want to spend the entire trading day in front of the screens. And if you manage the risk well, that's profitable. Yeah, so I simply right now, of this inversion fair value gap, would look forward to target short-term highs. For example, this one right here, this one right there, and then maybe even this high. But starting from here, we started to respect inversion fair value gaps. Didn't want to continue lower. We closed above, retested, immediately continued higher. Also note, not leaving behind a new bullish inefficiency. Retesting the high of that previous candle right here, delivering very efficiently using the inversion fair value gap as a framework for an entry. I think we can confirm this now as a sweep, a little stop hunt for all these longs. And because we don't really have another fair value gap here or here, be looking for, and now we have equal highs. That's also another good sign. Or these short-term highs to potentially be cleared. Take a look at NQ. NQ also shifted structure right here. Breaker block, we did retest that and continued higher. Yeah, well, anyway, out of the timing window. All right, guys. If there are no more questions, please feel free to ask. Then that's going to be the end for the first live stream of 2024. Immediately snap back into that inversion. No. Anything else I wanted to talk about? We looked at the higher time frame stuff. On the hourly chart, close below our hourly bullish fair value gap. Let's hide the drawings here quickly and put them into our folder. 1 hour structure. We filled that inefficiency in. Now it would be a potential inversion fair value gap where we look for resistance. On the higher time frame, we have unfilled inefficiencies right here. Well, no. Now looking at it in hindsight, I even feel silly for taking more. Well, I only took two trades on a funded account at least. But even that is, yeah, could have been easily avoided. Now looking at it in hindsight, of course the opportunity was there. 2022 setup, unicorn setup. But still, after such a drop, anyway, managed the risk nicely. All right, guys. If there are no more questions, I don't really know what to talk about. I'm gonna leave the charts to themselves and we will be back tomorrow. So make sure to, if you trade the London session, stay up to date what I share inside of tape reading. And sometimes if I'm very confident in a setup, I'm gonna ping all the VIP members here inside the trade idea section. And yeah, then I will be back on for a New York session live stream tomorrow again. Maybe with out a seek and destroy, but we will see. Alright guys, yeah, see you tomorrow, take care and enjoy the rest of your day. Bye. And if you have any questions, like I said, feel free to send me a DM, put the question into the VIP chat, put it into the general chat, wherever. Alright, bye.